All right, welcome to this episode of Real Estate Chat. Sound check. If you can hear
Sound
our
check,
audio,
test 5-9.
let us know if it's okay. I know we one time played around with advanced fancy microphones, and hopefully this is okay. If not, then we'll play around with the sound settings further. We are
John de Perez.
and Robert Eid. Robert,
Yes.
did you know that 45% of mortgagees, right? The ones that
G, I
pay.
like the interest. So mortgagors is the payer.
Okay, the mortgagor is the payer. And so 45% of mortgagors and 54% of renters are struggling to make monthly payments. And in today's episode, well, first of all, did you know that that was happening?
Well, if that's what someone who was going to give them money asked them, and if they said yes, that they would give them money, then I guess that's a valid survey, but I don't believe it.
Okay, we're going to find out where the source of this survey came from. And if this were true, let's say it is true that almost 1 in 2 are struggling with monthly payments. That's like half
Okay,
the
sure.
population is about
Let's
to
assume that.
collapse. So whether you own a house and you can't make those mortgage payments, you go to renting, but then half of those renters can't make those payments, then we're in for a real estate housing crash. Let's see if that's true. What we're going to look at is this survey, what it says. Then we're going to ask Robert, based on this survey and based on reality, what is it that's truthful for somebody to experience in this particular market with the interest rate hike that we recently talked about in our last episode of Real Estate Chat. Make sure you like and subscribe. Let's jump into it. First, Robert, I'm going to share this article, I guess, with you from Stories. And this was about a week ago, like June 6th, well, 10 days ago now. 45% of mortgage holders, 54% of renters, so about half of each, struggling with monthly housing payments. It is an Angus Reid Institute poll. So for those of you watching this, we'll share this link in our show notes. But here's a fancy infographic that they did. So here's renters from, I guess they surveyed last year and this year in June. Here's the owners last year and this year in June. And I guess they amalgamated all of this. And I guess between tough and very difficult, they just combined, tough and very
45.
difficult. However, that's gauged, I guess,
Yeah,
emotionally.
45 and 54. If you add those two together, you got it.
Yeah. And so that's what, 314, 45%. And then for here it's 54. So there's respondents that say it's tough or very difficult versus, hey, it's manageable. I feel good about it, and I'm okay with paying $5,000, $6,000 a month in mortgage, and no worries at all. 8% of the population. So I'd love to be in their shoes. Robert, what are your thoughts on this?
Well, whenever you look at a poll, you have to look at who paid for it. And what's the message that they wanted to get data to support so that then they could make their point. And Angus Reid used to be very reliable, had a very good reputation when they would phone out. They had a whole bank of people, and they would phone out, or they would have a group of consumers come in. I was on one of these a couple of times. And, you do a survey of a product or whatever it is, or they would phone up to 2,000 or phone up to 1,000 people. And now they've switched over to a system where, first of all, they have a pool that they select by computer of who would be a cross-sectional analysis sampling, and then they call those 38, and whatever those people say, they extrapolate out. And other ones, they ask people to email in or to tick on a survey, and so the people self-select that they'd like to be included in the survey because, again, they would like their point of view to be presented by Angus Reid. So just consider the source, consider the format. If they don't say this was a sample of 2,000 people and it's right 19 times out of 20 plus or minus 4, they don't do that, then it's garbage. It's not a survey. It's just their opinion that they've got some data to back up.
Well, there's also the assumption that in 2022, you surveyed the same people in 2023, because otherwise you wouldn't be comparing the same pool of people.
No, they asked them, how was it last year? How was it this year?
That's
the same people.
Okay. Well, that makes sense.
Well, why not do it that way?
Yeah, well, I mean,
it doesn't tell you.
Then I go to the point
if you look at them again, you see it's the same. Well, it didn't change. So why bother?
True. So then I go to the point of subjectivity, like it's based on feeling. So let's say I went home today and
exactly.
I had a bad day at the office, and I'm like,
a year ago, how did you feel? How did you feel a year ago? Do you remember?
Exactly. So no, I don't. I guess it depends on how I feel. I mean, it's Friday today. I'd probably answer this favorably on a Friday versus, I'm coming
What
into.
about last year? It was the same, were better, worse last year.
Well, hey, I don't know. I barely remember last week. So I mean,
See,
it's
there you go. So it's a
so,
fabulous article by a fabulous source. Real Estate
well,
Stories is that, stories.
you know what?
Title is good. Their title is good.
Well, hey, you know what? We're piggybacking off of their title. So make sure you like this video. But on a serious note, too, I mean, not that this passes a couple of minutes, we're not serious. The most serious thing about this is this. This survey is based on emotion, based on feeling. Why don't we look into, I mean, obviously there's privacy issues involved with that, but why don't we look into the bank accounts of these people making these mortgages and say, hey, as a matter of fact, X number of population is actually missing payments or have not paid, rather than how do you feel about being able to make it next month? Same with renters. I mean, there's no database for this, but how many renters are actually behind on rents? Surveys like this, I mean, they make great edutainment, if that. I mean, if you want to believe in it and follow it, or if you want to justify, I guess, your belief in how you feel in your life situation, then great.
The sky is falling.
Sky's falling. Let's bring Sky's falling to the next article, which is Canada's average home prices rise year over year. I know we talked about in our last real estate chat episode about the prices dipping just by 1%. But as a whole in Canada, we're not doing so bad. Canada's average home price has risen, marking a turning point. So here's what real estate haters will hate. There's a turning point now in the market where prices are actually going up Canada-wide. The average home is $729,000. I'd love to know where that average home is because I'd buy that average home. Trade in the high payment mortgage home for this $729,000 home that exists somewhere in Canada. In May, first year over year gain in 12 months. So we're going to go into Robert's charts momentarily, but Robert, tell us a little bit about this article, which we will also link in our show notes.
Well, this is a writer from the National Post, Financial Post, who's taken an excerpt from the report that comes out on the 15th of every month from the Canadian Real Estate Association. And there's a bold paragraph on the second page that says the actual, not seasonally adjusted national average was 729 in May, up 3, blah, blah, first year over year. So there's our headline. However, it says that most of the increase was attributed to increases in the GTA and lower BC lower mainland, excluding the GTA and Greater Vancouver from the calculation, cuts almost 150 from the national average price. So is that in that article? It was in the release.
I guess you pick and choose what you want to shed light on.
Didn't we just say that about the other one?
I guess so. So then,
Everybody's got a bias. Everybody's got a bias.
You know what? Let's look at something that's non-biased because it's based on the actual data. And I'm going to show your charts now, Robert. And what we're going to talk about is inventory, sales, pricing, and what we expect June, well, what Robert forecasts June to do. Let's start with a real life story about active inventory.
Okay. So as of yesterday, we can say that there's 13.6 in inventory on the Toronto Real Estate Board. And that's going up. It's going up. It's going up. It's going up. But it's still 16% off the 5 and 10 year averages. So it's improving. Normally, inventory goes up in June and through the summer, but we haven't hit the average. Until we hit the average, we got nothing to talk about.
So it's still a shortage, relatively speaking. Sales having risen 24% year over year in May. If that happens in June, I mean, time will tell.
Everything gobbles inventory.
Yeah.
New listings add to inventory. Sales take away from inventory. So the net effect as a snapshot. So this is a snapshot on the 15th of June, which may bear out to be exactly the same as it was in the second half of June. We don't know. But so what we're saying is it's moving up towards what we like to see, which is at least the average for that same month. But we're still light. So it's tight. That's all we can say from this.
Okay, so going into the summer, if you're buying a place, make sure that, of course, the real estate professional you're working with helps you navigate properly, because there will be multiple offers in some places, and in other places, depending on the dynamics of that particular area, neighborhood, and demand for that particular neighborhood, you may be able to find a deal. But again, depends on factor of, are there a lot of competing listings on the market? And are there buyers that did not go away on vacation or are doing anything else aside from buying a home? Let's look at your, what would happen if a year, the anomaly year, was eliminated from the past couple of years in comparison when you're looking at price.
Right, this is supposed to show the trend that happens every year. This is the school year that starts in September and goes through to August, so it's a little bit hard. But the other time we looked at this, it was overcome by this falling down line, which was 2022, that fell down, and the prices were high and in the beginning of the year, and they fell down. So this one just says that year was wrong. And what I'm trying to say with this, because this is why I've always been using this as a 2-year comparison, is to say, you know, there's a pattern that happens every year. And the worst time is December and January, and then it gets better throughout the year. So the pattern is true to form. If we and when we're not distracted by this terrible anomaly that happened last year. There's nothing wrong with what happened last year. Boom, bust, they go together. But if you get rid of it, then it doesn't influence your thinking.
And the only other, I mean, I guess, break of this pattern was, if I'm reading this chart correctly, 2019, 2020, where there was a bit of a dip.
Well, that's because we got locked down there.
Because exactly. And then that's where this whole anomaly started. So interesting to point out that if you look at this year over year, the prices are supposed to skirt or kind of float above the previous years, which continuously happens. With the exception of that initial lockdown, but then it picked up and it would have been back to normal, except here's where you started to see the rise due to cheap money, due to money being printed, low interest rates, and all of that sort of stuff.
Yeah.
So Robert, eliminating that spike and then subsequent drop, the market's normal. Prices are normal. Inventory is a bit low, but things are going along. Let's look at this chart, which shows Robert's forecast of what's to come in June.
Yeah, well, if we take the after 9 of 22 days, the number of sales that were arranged, and prorate that for the rest of the month, so we're projecting, we see that June is always, it falls off a little bit from May, but is within 5, 10%, 15% of the 5 and 10-year averages. And so it's another good month relative to the lousy ones that we had at the beginning of the year and the end of last year, which were 30 and 40% off the 5 and 10-year average. So this is like a May again in June, and that's the first half of June. Sometimes the second half of a month is different than the first half. We're going to see, but we're better by 25% than the year before it in June.
So is it fair to say things are just moving along just normally or fine or as expected? Like there's no
well, it's a shrunken version. We have a shrunken number of new listings, we have a shrunken number of inventory, and we have a shrunken number of sales. But in each one of those listings that are for sale, or buyers who want to buy, they're having the same competitive problems. And what am I going to look at? And everything that I want to look at, they don't want offers except for 2 days from now or for 5 days from now. It's a compressed market. That's a fierce seller's market, where the seller can say, no, I don't want that one, I can get another one tomorrow. It's just shrunk, but the same dynamic sales ratio to listing inventory.
Yeah, so make sure you do everything that we've been telling you in every single episode almost of Real Estate Chat, which is do what's right for you. The headlines, they're going to be sensationalized. You know, if I ask 10 people randomly on the street, depending on where I am, obviously there's going to be different answers and different demographics, but like a scary headline such as half of the population's about to collapse, they can't pay their mortgage, they're behind on their rent or cannot pay their rent. I mean, you got to look at your reality, you've got to look at your finances, do what's right for you. If you're an investor, there will be opportunities, needless to say, right, Robert? I mean, in the next coming months, whether you're looking to buy in the slower seasons, whether it's summer or winter, where a little bit more motivation for somebody to sell in the middle of winter time, for example, is different than somebody who's preparing to sell in the spring market. So navigate through these, but do the right thing for yourself and don't stretch your budget. I mean, when you're looking at these rates going up again, yeah, it is a scary thought. It's not impossible to be able to purchase a home per se, depending on your financial situations. I mean, I'm not talking about there and go buy a Toronto $1.2 million average house.
Well, no,
right?
if you can be approved for it by an A lender, then you can afford it.
If you can afford, sure. If you can't afford it, we're not telling you to stretch your budget, be reasonable. And if you can't buy and you need to rent for a couple of years to see where that takes you, then that's what you do. Robert, anything else you want to add to this?
Well, that's a good summary. That's fine.
Good. All right. Thank you for joining us on this episode of Real Estate Chat. If you liked it, click on like. If you disliked it, and if you dislike Angus Reid, no, don't dislike our video because of Angus Reid. We have no association with them whatsoever. Make sure you leave in the comments what you think and ask us questions. We'll be happy to answer you. We'll see you in our next episode of Real Estate Chat. Bye for now.
See you later. Bye-bye.